room is working. So I'm going to check. Okay, for those of us that were not in the class when we started, so we'll kindly walk down through what's Forex. So I think there are some people online also that are also watching that they were not able to be in the class. So Forex is actually foreign exchange, and it was derived from the word FOR and EX, which is Forex. We'll start our today's class by 12, just to brief everybody. So the advantages of Forex is you can trade as low with $10 up to 100, 100, 1 million, and the rest. The simple example of Forex is when you go to the go to Bureau de change and you buy $1 for 1,500. When you hold that $1 till tomorrow, that $1 becomes 1,015 naira. You end up making a profit of 15 naira. So, and the Forex market is one of the biggest markets, is the biggest market in the world actually. So, but we have the global market, and in the global market we have the stock exchange, which is where you buy equities and shares and companies, shares of companies. So you are like the owner of the company. That's why companies have board of directors meetings. Those board of directors meetings are people that own the company. So we have examples of shares, stock exchange you can buy, New York Stock Exchange, London Stock Exchange, Nigerian Stock Exchange. Then we have companies like Dangote, Apple, and the rest. They sell their stock price. So also we have commodity markets. So the commodity markets are raw materials that you buy, like you see gold, silver, the likes of the rest. Then number three, we have the money market. Money market is a simple short-term borrowing system, just like what Fair Money, PalmPay, and OPay offers people. That is the money market. So when you are collecting a loan from a bank, that's the money market. So then number four, we have the real estate market. The real estate market is you buy a land for 2 million naira, you sell it for 3 million. I'm just trying to brief through everything. Then the crypto market, digital currencies, BTC, Ethereum, and the rest. I think this is one of the only markets that run 24/7. So from Monday to Monday, the crypto market is always open. Then number six, we have the futures market and the bonds market. Then back to the Forex market. The Forex market has four major sections, or sessions, I should put it that way. 4 sessions, and the Forex market runs 24 hours, 5 days a week. So from Monday to Friday, you have the Forex market functioning. Now, in those 5 days, we have GMTs. So those GMTs are what cover the zones or countries under that GMTs for their trading period. So we have the New York session. You can see the New York session covers the American continent. London session laps up with the New York session. It covers the African continent and the Europe. Then Tokyo and Sydney covers up Asia and Australia continent. So the Sydney session starts the trading session. And according to our own time in Nigeria, our trading session starts by 10, 11. It depends on the time shifts. So sometimes we may start by 10, sometimes maybe winter. During winter, you start by 10. During summer, it starts by 11 or so. Then Tokyo session laps up and it is active for JPY pairs. London session is for Europe. New York session is for the Americans. And New York session overlaps with London session. So from our own time, 1 to 5 p.m. is the New York session. So not 1 to 5 p.m. Sorry, 1 to 5 p.m. is the most volatile. That's when you get the markets moving with big moves and you see spike of candles and the rest. Please, can we move down? So in the Forex market, we have what we call Forex currencies and Forex currency pairs. So Forex currencies, we have 3 types of currencies or currency pairs. So we have major currencies, which they consist of 8 major countries. And those 8 major countries are, will I say, the most developed in the world when it comes to trading, and they have equity and companies in them. So we have the United States dollar, which is USD. So most of the times you won't see on your chart or in Forex, you won't see them written like this, but you rather see them written in 3 short forms. So you see USD, which is the dollar, EUR, Euro, GBP, and the British pound, JPY, Japanese yen. Can we move down? So we have CHF, Swiss francs, CAD, Canadian dollar, AUD, Australian dollar, NZD, New Zealand dollar. So now these 8 makes up of the majors. So anytime you hear people say major pairs, the major currencies, those are major currencies. Now we have minor currencies. Minor currencies are countries that are developed, but they are not really being traded. So it is either they don't have companies, they don't have capital, or they are, how will I put it? We don't have number of people trading that pair. So when you have less people trading it, it doesn't move the market. It's like saying Indomie sells more than Mimi noodles. So you can see somebody that will buy 5 cartons of Mimi noodles and buy 10 cartons of Indomie, and the 10 cartons will finish, but you will still have like 2 cartons of Mimi noodles. These are what the Mimi noodles and Forex are, the minor currencies. So they are not really, they are being traded, but not as much as the major currencies. So we have South Korea, Hong Kong dollar, Singapore dollar, Swedish Koran. Then we have exotic currencies. So exotic currencies, these are developing countries. So countries that are trying to develop, that are trying to make their way in the global market. We have the NGN, we have the Mexican peso, we have Brazilian real, we have the rand, Egyptian pound, and the rest. Those are exotic currencies. Then now we have what we call currency pairs. So currency pairs are major currency pairs are pairs that always include the United States dollar. Now, when they include the United States dollar, they must be from one of the major currencies. I hope we are following. When we are saying major currency pairs, these are major currencies that are paired with the dollar. So we call them major currency pairs. So we have the Euro USD, GBP USD, USD JPY, USD CHF, like this. The way you see them this way, these are major currency pairs. So can we move down? Okay, minor currencies. Now, minor currency pairs are actually quite different from minor currencies. So when I explained minor currencies, I explained minor currencies to be currencies that that are coming from developed countries, but they are not being traded. But in this case, minor currencies are always major currency pairs, but that don't include USD. So when you have Euro GBP, Euro JPY, all these pairs here are major currencies individually, but together they are cross pairs or minor pairs. So they don't include the dollar at all, but they are from the major currencies. Can we scroll down? So exotic currency pairs. These pairs combine one major currencies from any of the major currencies with smaller economy. So when you have things like the USD, NG, these are exotic pairs. So they are not really being traded like that as much. So and we have low liquidity, higher spreads, and the rest. So what makes the forex market move? The forex market moves because of major things: supply and demand. Number one is economic news. When you have things like interest rates, inflation, employment data, GDP. So all this employment data, when we have less jobs, company leaving the country, it causes unemployment. Unemployment means we'll have a weakened currency. Interest rates, the same thing. When interest rate is being reduced, you have investors leaving the country because they are not going to make money from the money markets. So then we have political and geopolitical events like the war between Russia and Ukraine. A lot of Russians were being sanctioned and they had to leave Europe because of the sanction. Then the recent one that happened, Trump and China tariff deal. So that trade deal actually caused BTC to actually collapse all the way down to below 100K or so. Now we now have market sentiment. Market sentiment is basically speculations. For example, when Nigeria filling stations notice that the price of oil is going to go up, what do? They close their filling station because they don't want to lose in the market. So meaning that when they buy fuel for 750 and they're selling for us at 800, when they speculate that price is going to go up, they close their filling station, wait for the current price to be to come out. So if the price is now 900 or 950, they're not going to make more profits. So that's market sentiment, and it is done by big institutions, big banks, and companies. So not just only filling stations, but banks do it, big companies do it. I think in a recent interview with Dangote was saying, don't hold, if you are holding the dollar, sell it. I won't advise anybody for the next few months for you to hold the dollar. And even before that time, the dollar has been going down. So from 1.6, it came down to 1.5. Currently, the dollar is at 1.4480. So can we go down? Okay, so we have the central banks. So the central banks has a lot of say in the forex market. Then we also have demand of imports and exports. So when we are exporting goods outside the country, it increases our value because whoever is buying that goods from us has to change their currency to our own currency to buy the goods from us. You can't, as we are like this, if you want to transact with a Ghanaian, you can't collect his Ghana cedis because you can't spend it in Nigeria. So if he's buying from you, he has to change to Naira, then buy from you. Likewise, also, when we have high imports, it reduces our currency because we are changing our currency to other currencies to spend. Then unexpected events, things like natural disaster, tsunamis, pandemic, major company collapse. I think one that happened during 2022, 2023 was FTX. his company actually crashed, and it actually affected the crypto market. So can we scroll down? Okay, so the structure of the market, the structure of the Forex market comes with market participants. So as you can see, we have the central bank, the banks, financial institutions, big companies, hedge funds, and we have people of influence, which are the governments and the rest. So people like Dangote, people like Fed Powell, he's the chairman of the Federal Reserve of the United States. So I think maybe once in a while you'd have seen a meme of a white man that will just come up and speak and the market will go down. That stuff is actually true and real. When that man speaks, the market can actually misbehave. So then we have the government also. So can we scroll down? Type of market participants. We have the government, we have the central banks, we have the normal banks, we have other financial institutions, we have multinational companies, and we have hedge funds. So all those companies operate in different forms. Hedge fund operates in speculation, government operates in coming into the market to bring balance in supply and demand. Sometimes companies too have a say too. I think there was a time Indomie price was skyrocketing, and the sales from Indomie was not what people were offering out to us, the consumer. So Indomie had to say, whatever we are going to give you people, make it also this way. So they had to put a price range between the wholesaler and the retailer. So now we have the retail trader. Now this is where we all fall in when it comes to trading the market. So we are basically speculating. What every other person is doing is what we will just observe to follow in the footsteps of what they are doing. So if we know that the Nigerian government is going to borrow more money, which is going to affect our economy, we can predict that, okay, in the next few months, that means dollar is going to rise. So because of the borrowing and the expenses, it can affect our economy. So now how the Forex market works for every retail trader. A retail trader uses an online broker to trade from their laptops or phones, and you have access to the Forex market through brokers using platforms like MetaTrader 4, MetaTrader 5, CTrader, MatchTrader, TraderLog, as many more as possible. They offer you price. Also, TradingView also is also a platform where it offers you current market price. So for us that are watching online and for us that are here, we can download the MT5 apps on our phones. If you don't have it, you can download the MT5 apps on your phone, and that's what we'll be using. We won't be using other platforms. We'll just be using the MT5. So when it comes to ask and bid price in the Forex market, ask and bid price is just simply when you ask, you are pricing to buy. When you bid, you are pricing to sell. When you buy, it's to long and short and the rest. So can we go down? Okay, I think this was where we stopped in our previous class. So price quotations. The way price quotations work in the Forex market, we have what we call base currency and quote currency. Base currency is the first currency we see in the Forex market. So when you see BTC USD, it means BTC is the base, while USD is the quote. Now, the base currency is always valued as 1 unit, while the quote currency is what you see on your MT5. So anytime you are seeing price move on your MT5, that's the price of the quote currency. So like, for example, 1 BTC, can we scroll down? Okay. More, can we go down? Okay. So 1 BTC base currency is 100,000, $5,050 quote currency. This is the way it will show on the MT5 app. So BTC US. So when you are seeing this, it's not magic. It is the price of the quote currency. Same thing as GBP USD. 1 GBP is 1.31 USD. So $1.03. That's what it's going to be. So components of a quote currency, as I've explained, it is, we have the base currency, which is the first. We have the quote currency, which is the second. Can we scroll down? Thank you. So we have bid and ask price, then we have spread. So now this spread here is where the broker makes their money off of you trading. So when you are trading, when you place a trade, the broker gives you spread, and that spread is where they get their own commission. Now, if you have brokers like Xness that offers raw spread, they will only charge you for commissions, not for the spread. So they will give you direct pricing, but they will charge you according to commissions. So can we go down, please? Okay, so this is the way it's going to look on your charts. You have these two lines which will show the ask and bid price, and between here is the spread that the broker will take from us. So can we go down? Okay, so this is where we stopped in our class, and as we have it is already 11:54. So what is PIP in the forex market? So PIP stands for percentage in points or price interest points. So understanding pips and decimal places in the forex market is very, very essential. Understanding pips will help you understand your lot size you are supposed to use. Because I'm using 0.10 on GBP USD doesn't mean I will use 0.10 on gold. Their pip count is actually quite different, so we can't do it that way. Now, for example, if Euro USD is 1.15, the decimal places are actually 4. Most times it is 4, but the way you see it on your chart is 5. Now, when it is 5, we are not counting the last number. We're actually looking at the main 4. So, can we go down? So 1 pipette is 0.0001, 1/10 of a pip. Can we go down? So as we see here, you can see it is 1.15562. We are going to be counting the first 4. If you check your MT5 app, we are going to be counting the first 4 as our 1 pip. So when this price, can we go down so I can show the illustration? So anytime price moves from 1.1556 to 1.1557, which is the 4th decimal, not the 5th one, that is 1 pip. We count it as 1 pip. So let's just say the way it is 5, when it moves 10 counts, on the 5 decimal, when it moves 10 counts, it is 1 pip. But on the 4 decimal, when it moves once, it is 1 pip. So 1.15562. I think the camera went off. So for Euro USD, things like Euro USD, GBP USD, AUD USD, they use 5 decimals. So different pairs have their different counts. Now for JPY pairs, they have 2 counts, 2 decimals, or the way you see them is 3 decimals. So wait, let me just hold on. Let me go to the chart here, so I'll show you guys what I'm saying. Okay, so I'm going to count from here all the way. So I want you guys to see the 1 pip. Okay, so you can see price moved from this blue line here, 1.13654, all the way to 1.131664. So you can see it moved 10 counts, right? 10 counts, because it is 5 decimals. That 10 counts is 1 pip. Do you understand it now? So this understanding this will help you when you want to use your lot size. So likewise, as if you want to count 10 pips, 10 pips will also be 100 counts here. Sorry. Okay. So as you can see, 1.3164, 1.3174. So 100 counts, 10 pips, right? That's the way price moves on Euro USD, GBP USD, AUD USD, NZD USD. So these pairs, when you see 5 decimals, they actually move in that way. So now moving on to JPY pairs. JPY pairs actually different from the 5 decimals. They have 3 decimals, but we count the 2 decimals. Just the same way Euro USD is 5 decimals, but the pip count starts from the 4th decimal. So the same thing, three decimals, but it starts from the 2nd decimal. So if I use this tool here, okay, so you can see 562, 572, right? It's moved from 6 to 7. So 6 to 7 is 1 pip. So that's the way you count it on USD JPY. USD JPY is almost the same count in decimals as gold. Gold is also counted in 2 decimals, but gold is not like USD JPY. Even though it is counted in 2 decimals, gold count is quite volatile. So and on gold, most of the time people count it as ticks. So 100 ticks here is 1 pip on gold. So as tiny as this movement is, as you can see here, it moved from 82 to 83, right? So when you are counting on gold, you are counting from the last, that's the last decimal, not the last decimal, you're counting from the last number. So anytime it moves from 4082 all the way to 4083, that is 1 pip. But on gold, it is 100 ticks. So they call it, sometimes on some brokers, you actually see 100 ticks. So if you want to see, let me move this to 1000. So this is 1006, but this is 10 pips gold, right? But the count on your lot size on gold is quite different because it is very, 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 very volatile. So it won't count as the way. I wish the market was actually open so we could actually place some trades. So you actually see the lot size. I think maybe when the class continues, you see the way our lot size counts on gold. And the reason why a lot of people, like, you hear a lot of traders say, oh, I like to trade gold because gold is very volatile. It's because it's quite volatile than every other pair. So JPY pairs, there are 2 decimals. Gold is 2 decimals, but we count from the last figure. Then Euro, USD, and every other pair that is 5 decimals, we count from the 4th decimal. Please, can you help me scroll down? Thank you. Scroll down. I think I've covered everything. Okay, hold on here. For pairs like NASDAQ, right? NASDAQ counts on, there are 2 decimals, but they count on just the same thing with gold. Every price that moves, once it moves from 25,590 to 25,591, that is 1 pip. So it counts like gold also. Can we scroll down, please? So I think this is the end. Okay, so leverage, right? I think this part is where we actually need to understand very, very much when it comes to trading, because leverage is simply borrowed money to your small money. So let me put it this way: you are giving me $10, but I am giving you the power to purchase something worth 100,000 in your $10. I don't know if you understand what I'm saying. Let me put it this way: you want to buy let's say Coke. So 1 Coke is 500 naira. You have 500, but you want to purchase 10 of it. Now, leverage means with your 500, I multiply your purchasing power. So you'll be able to buy 10 of the Coke with your 500 naira, but it comes at a cost. Why? You can lose your 500 faster than when you use the normal pricing. So leverage is borrowed power that magnifies both profits and losses. So for example, if you are signing up on the Xmas account, I'm coming. I want to, can you type Xmas for me? Okay, thank you. That's the download. Okay, I think when you were signing up for the Metal Trader 5 accounts, did you see where they gave you leverage to pick leverage? You guys didn't notice it. There's a place, anytime you are opening an account with Xmas will tell you what leverage do you want to use. Do you want to use 1:100, 1:1000, 1:2000, 1:unlimited? Now what that does to your account is it gives you purchasing power to place more than enough lot size on your small account or whatever account you are trading. So it magnifies your account. So so for every dollar, like for example, if a broker gives you 1 to 100, for every dollar that is in that your account, they've magnified it to control $100. So now, if you have $100 in your account and your leverage is 1 to 100, you can trade $10,000 in the market. Now, normally in the stock market or futures market, you must have a certain amount of money to enter the market. They don't give you, welcome, they don't give you that kind of leverage. They control the leverage 1,000. That's for a lot size. Now, normally, you are not supposed to use that even on a $100 account. But leverage can give you the opportunity. Now, you are using a $100 account. If that market goes against you 10 pips, you've lost your $100. But if your leverage is 1 to 100, 1 to 1,000, you can use that lot size 1. Use it even 2 times or 3 because they magnified your purchasing power. Do you understand? So that's what leverage is. So the lower the leverage, the lower your risk. The higher the leverage, the higher the risk. So can we move to margin? Oh, that's so I think on your MT5, if you open your MT5 app currently and you are seeing the money that is on your MT5 app, you would have seen things like margin. Have you guys checked? Can you open your MT5 app, please? Thank you. So when you open the MT5 app, you go to trade, right? Right below your trade, if you don't have any trade currently running, you will see balance, equity, free margin, right? So now, what margin does in the market is, margin is the actual amount of money a trader needs to deposit with their broker. It is not a fee nor cost, but it is a security deposit. Let me put it this way. Even as much as they want to give you purchasing power to purchase more than your account, they are using margin to limit you from extending beyond what you can purchase. I don't know if you understand. So when you open a trade, the broker temporarily locks up a portion of your account balance as margin. So what they do is, when I think the crypto market should be open. Do we have BTC? We should have BTC on our charts now. So we can place one trade on BTC. So that you guys will see what I'm saying. So if you place a trade on BTC, because BTC is the only market currently running. So if you place a trade on BTC, whether buy or sell, you will see that your free margin now will now come out as margin. You will now see, okay, see it here, free margin. So now this free margin is the percentage of what your account can handle. Like when I place a trade now, this margin now is 192.6. If I place another trade on BTC again, I think it's the same account now. Okay, you see that the margin has dropped, right? It's now at 528. Now this margin is actual amount you can use that the broker will lock. So they are locking this money in your equity, from your equity. It's, how will I put it? It's like using a nail to to hang a stamp or something. It's to put your price out there, but there is a certain amount that needs to hold that your position. So this position is being held by that margin they've taken away from your account, but they've not taken it. It's not gone. It's just, I don't know how to put it. It is there, but it's not there. So they've taken it to secure your position, and they are limiting you to what you can play. So if I keep placing a trade now, let's say I want to extend my lot size to lot size 50, right? Or let's say lot size 20. You can see that the margin has gone all the way up because of the lot size I used. I currently increased the lot size to lot size 20. You see now that they've taken $5,000 out of the 7,000. You know, before, because of the lot size I used, they secured 500 from the account. Now I increased the lot size. I've used 5,000. Now if I want to do the same thing, they won't allow me, because I will go above my account size. So when I press this now, they will tell me not enough money. So now, but if I reduce that lot size now and I use 0.2 and I place the trade again, it will activate. Please hold on. Okay, let me use 0.05. No, I want to increase it. Okay. So you can see as I kept on placing more trades, the margin kept on increasing. So even as much as they want to give you enough leverage to, if you put unlimited, they will still tell you you are having margin to limit what you can place in the market. Because if they don't do this, then you can go beyond the broker's expectation. And sometimes some of these things were actually placed because of market manipulations and so on and so forth. I think one of the crashes that happened in Euro CHF left traders owing their brokers. So when you have something like a margin call is where your account gets, I don't know if you guys have seen videos where people show their account and the account is on red, and down here is also showing red. Now that red on the number, on the margin, is telling you you don't have enough margin, and very, very soon the broker by themselves will close all your positions.